Yeah, welcome to another video today, actually by Shibuya Republic, but I think today's video is actually going to be by the Tokyo Real Estate Man, and I'd like to welcome all viewers to the smallest cafe, the tiniest cafe here in Shibuya, Tokyo. And yeah, today we are going to be talking some Tokyo real estate, and I have not been uh, doing any real estate stuff on this channel, but I decided from here on out I'm gonna start doing some real estate videos again because hey, that's my core competency and that's what I like. It's my one little area of expertise, not expertise, but some little area that I feel like I'm confident to talk about. uh, Real estate market in Tokyo has been pretty hot. It was spilling this at it's the 3rd of April in 2022, and the market, well, since the pandemic has started, has continued to be really hot here in central Tokyo. Um, why? What is the motivation of Japanese investors? When I was buying a lot of my properties that I own here in Tokyo, yeah, like real estate was definitely not in vogue. It was in a down period as the deflation ripped apart. I didn't actually think it ripped apart the economy, but like the deflation in Tokyo was this like slow beast, I guess. It just kept like but like part of it, like you can blame a lot of people like try to blame the central banks and stuff like that, but Japan was also in like a naturally deflating situation where the population was aging and it was also like slowly decreasing, right, which is like deflation because there's just less activity because there's less people around, so that's a naturally deflating situation. And I happen to be fortunate that I was buying a lot of units in all those years, and also like was in some good career years where my career paperwork was very good and it was very good to get financing. But let's cut to the chase here. And as thinking about, yeah, so you could say that from a price point of view, it could be like a poor time to invest in Tokyo because it's at its like all-time highs. But yeah, in recent times where the forex markets have presented like foreign cash buyers actually with a unique opportunity. I think the yen's sitting in the I didn't exactly check. I should have checked before I made the video, but it was at 123 the other day to the US dollar. So the yen seems to be in a very weak position right now as the other foreign central banks around the world continue to tightening and slowly up their interest rates. The Bank of Japan has continued to has been the only bank with a so-called loose monetary policy, and that has led the yen to weaken here to the 125 level. And last year I was trying to recall, it was probably 105, 106, 107, 108, so it's come down quite a bit. And it presents people like the foreign cash buyer a really great opportunity, I think, to purchase a central Tokyo property with cash. I think it's really good timing for something like that. But having said that, the timing could actually get better if this trend were to continue. And so it's been my observation over the years that often trends continue a lot longer than you rationally think they should. Like I think that the yen is undervalued right now, which making the Japanese assets undervalued. But you know what? They could easily become more undervalued, and like my idea of great timing could be premature, or it could be, I mean, it could turn back the other way. I really don't know, but I've seen it happen both ways in my investment career, and I'm always prepared for it to go both ways. But I think that like there is a good window of opportunity right now. Having said that, that could get better or it could tighten, or the window could itself tighten or close and not be as attractive as well. So yeah, that's just being my outlook toward that. Now, as the other central banks continue to do their tightening, but we know that that the most indebted uh, players in all the markets are the governments themselves. So, like the fact that there's this sort of like almost an institutional inflation happening right now that's in place, and nothing that the central banks can really do, and they're just, I mean, you can go back and look at the Volcker model, which was to put interest rates up to 20%, and they can't do anything like that now because the indebtedness of, I mean, the biggest debt holders in the world are like the governments. Yeah, it's a bit of a Ponzi scheme in that manner, but yeah, I mean, they can't do anything like this. And you saw that, like, I can use the Canadian example very well because I own a Canadian property, and I do keep my eye on the Canadian real estate and the Canadian sort of bond market. And you see that the government, tightened, or I mean the government, central bank, same thing though, tightened the monetary policy by 50 basis points, and the real estate prices have already come down. In some things that I read on Twitter, whether it's right or not, I can't really say, but there is definitely some downward pressure on real estate prices happening for some of the segments in the market that went up the most during the pandemic. And I can just say that my parents' old house in Surrey, British Columbia, in Fleetwood right now would be priced around probably the $1.5 million mark, and that's just me, I don't know, but that is just like, doesn't make any sense to me at all, like how that could be at that valuation right there. So like, if the market was to go down and some of the air come out of that price, that would be like a sensible thing to me, because that's just totally, I can just say, I could totally be wrong, but that is, I would just say it like this, that at $1.5 million, that would be an asset that I would sell, not buy. But having said that, if I had kids in Vancouver and a family that were growing and maybe my mind would be different, but like, I have an apartment that's here in Tokyo that's very, very big, and I can raise my family in it, so I don't have to make those pressure-filled decisions that other families might have to make. Yeah, I don't know, I mean, real estate investor, but I also see it from the aspect of like the family man. Okay, now back here to what I want to talk about, which has always been like the Tokyo real estate man, which is like, what's going to happen in Japan, and can the Japanese government, can they continue with this this loose monetary policy and not tightening up their interest rates? I think they have to remain loose because the government owes the most money, but at the same time too, they can't let the yen like and roll down the toilet much further either. So I think that I think some of this global tightening will probably, like, they're going to talk like they're going to tighten, and they go up a little bit, they always talk, and then they're going to induce a recession, and they have to loosen again. So it's like it's almost like you remember the thing when you were in high school and there was that sine wave? I think it's kind of like be a sine wave, and in between each of the zenith and the nadir, like the Federal Reserve, when I say the central banks, right? Same thing. The central banks will just send out their talking bobbleheads for the appropriate rhetoric at the time, right? In other words, they'll lie with whatever rhetoric they need to lie with, because that's what they do. Having said that, okay, now this is really one of the point of this video is if you live in Tokyo, I think, and even if prices are at, there are still deals around. So if you're quick enough to react to deals, I think there are deals around. And if you're working and you are a seishain, which is like a full, I don't know, like a full-time worker, a seishain is like a classification of, like, it's not when I was working as a teacher for many years, I was known as a Hokken Kaishain, which was like a temporary temporary worker. I wasn't really a temporary worker, but they didn't want to pay me like I was a seishain, so they kept me in that underclass like that. But if you are a seishain and you can get the any of the You can get into the flat 35, which I just think is the best mortgage in the world for anyone, and I have the flat 35 on my big apartment here in Tokyo, and I have a 35-year 1.1% loan for 35 years. So if the yen was to continue to weaken and the wave of inflation that is everywhere else in the world finally comes here to Japan, you could probably see like 10 or 12% inflation in Japan over the next 5 years, right? But then your property purchase will be financed at 1.1%. So even if the market was not to go up, it might still go down. I don't think that I'm some sort of genius and can see all the movements in price. But if you were to find a place that is a really good deal and you think is a really good price, and then lock in at that 1.1%, and with the 12% inflation, that would mean like a gap of 11% just for where you live. Okay, if you were to do investment loans like you can get, those are usually priced at a higher percentage, which is around 4%. So yeah, I think the 35 flat, if you're working here in Tokyo, is a great thing. And I would advise anybody to try and get into the 35-year flat. It's just going to take all the risk, but you have to cap that. What you do is a dual strategy too. Is that you get the 1.1%, but you try to buy an apartment in one of the more popular areas in Tokyo, okay, or wherever you live in Japan, okay, wherever your town is, there's going to be an area that's nicer than other ones, okay, and that population in that area is increasing because people or Japanese people that are doing better want to live there. That's where you want to invest. Invest in the area, the up and coming area, okay, where Japanese people and other people want to be, where the community creates a better product for lifestyle. That's where you want to invest, and then you want to lock in at that 1.1% on the 35-year flat. So yeah, I don't know if these are just my little thoughts. I'm going to do 2 or 3 more videos a week for the Tokyo Real Estate Man channel, and don't forget I am working with a real estate partner of mine, Nakamura-san, and if you are interested in purchasing a property in Tokyo, coming with us is going to end up a lot cheaper than it's going to be to work with a traditional agency where you're going to have to pay the 3% fee. We're not going to work for free, but like we're always open to all kinds of situations with remuneration. Okay. So yeah, you can contact me here through a DM on my YouTube, or you can go to my Instagram, Shibuya Republic with a K on the end, and you can DM me there if you are interested in purchasing a property here in Tokyo. Okay, that about wraps it up, and thank you for taking the time to watch another video by the Tokyo Real Estate Man, coming to you from the smallest, the tiniest cafe in Shibuya, Tokyo. Right on.